Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the weekly time frame with the highest probability scenario where we're looking for a bigger impulse to the upside in yellow, currently working on the yellow wave 3 with the internal green count 1, 2, 3, 4, 5. As long as price is not moving to the downside, touching 49.3k, this scenario is not invalidated. We are at the common target area for a wave of 4, which is the 0.5, 53.3k, taken from the low to the high of your wave 3. And after a wave 4, we do like to see signs of strength and price moving impulsively to the upside for your wave 5 to finish the yellow wave 3. Now, based on the current low that we have on the chart over here, the common target area for your wave 5 is between 79.6k and 105.2k, which of course is a very big target area, but based on the lower time frame impulsive structures that we eventually expect in this scenario, we can get a lot more specific. After wave 3 and the green wave 5, we're going to be looking for the yellow wave 4. A wave 4 of a higher degree, in this case the yellow wave 4, does like to retrace to the wave 4 of a lower degree, which is the price section of wave 4. This is an Elliott wave guideline. So what you can do is simply take a measurement from the start to the end of your wave 4, from the high to the low of your wave 4, and use this as a potential target area for your higher degree yellow wave 4, which currently then is between 73.8k and 53.5k. After this wave 4, we're looking for a wave 5 to the upside. Now, based on a little bit of an estimation of the green wave 5 finishing somewhere in the middle of this box and the yellow wave 4 finishing also somewhere in the middle of the target box for a yellow wave 4, the target area for your wave 5 is between 106k and 192k. Again, it is a very big target area, but based on the lower time frame counts and eventually the information that we have at that time, we can get a lot more specific. The alternative bullish scenario is that wave 3 is already finished. So here we have a wave 1, 2, 3 is in over here looking for 4, and a wave 5 towards the upside. A wave 4 is most commonly longer in time than your wave 2. So preferably a wave 4 is finishing after the 1 to 1 fib time, which is the vertical line on the chart, taken from the start to the end of 2 to the end of 3, comparing 2 with 4. The 1 to 1 is sitting on the 12th of August. The target area for your wave 4 is the 236 to the 05, 57.1k to 42.8k, with the invalidation being 37.7k. After wave 4, we're looking for continuation to the upside in a wave 5. If price would retrace to the 382 area, then the target area for your wave 5 is between 79.6k and 140.6k. If we then zoom into the daily time frame, the currently highest probability scenario on the chart is a 3-wave corrective structure, either an ABC or a WXY, but generally in Elliott waves, simple structures have a higher probability. So a zigzag ABC in that case does have a higher probability than a WXY, but you can see that the targets are overlapping and we are now reaching target areas to finish a wave C and finish a wave Y. So that is very interesting. Now on the chart, you can see that price has touched the 886 taken from the high to the low of wave A, which increases the probabilities that this move to the downside is a corrective structure in a wave C or in a wave Y. Target area for your wave C is the yellow box here. The most common target area is the 1 to the 1.236, 54.6 to 50.5k, and you can see the 1 to 1 has been touched, and the common target area for Y is the 1.236 trend-based fib extension taken from the start to the end of W to the high of X, which as you can see is also hit. So in this particular case, we are currently looking for price to either find local signs of strength and move towards the upside, upside, or one more drop and then move towards the upside. But in both cases, the probabilities are highest to move towards the upside. And now that we are hitting some interesting target areas, it starts to become interesting to look for local signs of strength. Now we do have some interesting support still to the downside, which we haven't touched. We have a weekly gap here, and the low of the weekly gap is the top of this range here at 53k, which is in confluence with the weekly order block. Also in the weekly time frame, we have the red candle here. So 53k down to 50.6k is also a weekly order block. The value area high at 49.5k, and generally the area between 50.5 and 48.5k, important support resistance area on the weekly time frame, is important. And then we also have this channel on the weekly time frame. We have closed some candles inside the channel, and the midline is also currently at about 51.9k. If we go to the bearish scenario, then the most bearish scenario is an impulsive structure to the downside, where we're counting this diagonal over here in wave 1, 3-wave structure 2, continuation down in a wave 3. Minimum target generally for a wave 3 is the 1.618 trend-based fib extension taken from the start to the end of 1 to the high of 2 here, 43.9k. But what does lower the probabilities for this scenario is that your wave 2 touched the 886 taken from the start to the end of 1. The 886 is a very rare target for a wave 2, common for a wave B or X. So again, it increases the probabilities that this is corrective and not impulsive for a wave 3. Looking at signs of strength, I think this volume profile and the simple support resistance areas that I have on my chart play an important role, because you can see that this support resistance area here was support for a very long time. We also have the value area low here. So a nice bit of proof of support would be for price to move back above the support resistance area, back above the value area high, preferably retest it, and then look for continuation to the upside, which is pretty much what happened once we made the 56k low. We moved above, we retested this area, interesting signs of strength locally, and of course a potential buy area to then look for the highs of the range. Now the support resistance area on the chart is between 59.2 and 60.3k, 60.4k, and the value area low here at about 61k. Please be aware that there is going to be news today. I will be live on YouTube at that time, 4 p.m. Central European time. There is some high impact news, 3 stars as you can see on the website Trading Economics. So make sure you trade safe. And if we then finally look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are highest for the weekly scenario that I've shown first, where we're working on the green wave 4. And then on the number 2 position, we have the yellow wave 4. On the daily time frame, the probabilities are also highest for this to be a 3-wave corrective structure, either a zigzag ABC or a WXY, but generally simple structures are preferred before really moving or giving higher probabilities to complex structures. We are in general, however, hitting target areas both for a wave C as well as a wave Y, so it starts to be interesting to look for signs of strength. And we do know that we still have some very interesting support to the downside, pretty much between 53k and 49k. So that is definitely an area of interest in case price is coming down there. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.